European markets mixed Monday following the attacks on France. Joshua Mahoney, market analyst with IG, joins me now from London. Joshua, it looks like the markets have actually been surprisingly resilient today. Why?
Yeah, like you say, it is actually quite surprising. We did see an initial sell-off in the markets, but we've seen a nice bounce back now, coming off the back of a 4.5% drop in the FTSE in particular last week. You would have been, excused for thinking that we were going to see exactly the same kind of thing, especially given what's happened over in Paris. But we've seen a bounce back, and actually, if you look at some of the previous events that we've seen in terms of like the Madrid attacks, the Charlie Hebdo attacks, the London attacks, sell-offs have always been fairly minimal, and actually we've seen markets bounce back quite soon after that. This one's actually happened near on immediately, so that's quite surprising. But bear in mind that we also, in particular with the UK, we've seen a little tick upside in terms of oil prices, and that's pushed some of the majors in terms of the oil market higher, and of course the FTSE 100 in particular is heavily reliant on those oil companies. But really we're seeing a bounce across the board, and ultimately there's not one particular reason for this, but it is quite surprising.
Have you seen at the same time any flight to quality in assets like gold or Treasuries, for instance?
Yeah, definitely. I think that's one of the sort of resounding features of the morning so far, and beginning to go into the afternoon as well. And that is that we've actually seen a tick up in some of these more beleaguered assets. Talk about oil bouncing. Now that makes sense because anytime you see geopolitical tensions, oil seems to spike, in particular anytime it's to do with the Middle East. We've seen gold spike a decent amount. Now this is coming off of the back of a very strong move towards the downside last week. So actually, this is quite notable, and the fact that we're actually seeing strength in some of these markets that you would expect to fall means that you should almost attribute it to what's happened over the weekend, because something must have happened over the weekend. So, it is clear that that is in a response to what's happened in Paris.
Beyond the minute-to-minute following of the markets here, are there expectations that there will be an economic impact in France from these attacks?
I do think so, personally. I think, ultimately, there may be benefits as well as weaknesses to this. We've actually seen some of the sort of airline firms selling off, and that's in line with the fact that probably tourism is going to take a bit of a nosedive over in Paris in particular. I wouldn't necessarily say that consumer spending within Paris or people that live there is necessarily going to go down, but I think if you were to choose your next destination for a European holiday, possibly for some people they might decide to actually leave that off the list and go somewhere else, just because we've now actually seen 2 consecutive attacks to Paris. But bear in mind that it's likely that they're actually going to increase spending in terms of security within France, and therefore that means more jobs and it means more spending within the economy. So that could actually be beneficial for the French economy. Bear in mind that actually over the past few months we've actually seen it start to sort of tick up the French economy in terms of we've seen them move out of a mode where they were seeing 0% month-on-month growth to, on Friday, just before the attacks, we actually finally saw them move out of that and move into positive growth. We've also seen them move out of a period where they've actually been contracting in terms of the manufacturing sector into an expansionary one in the past few months. But really, I guess, I don't think the manufacturing sector would necessarily be hit as much, but the services sector potentially, because we have that link to tourism. But the services sector actually has been a strong grower throughout 2015. I think it was January was the last time that we actually saw it contract. So I think the services sector is actually quite a strong one in itself. So I don't think we'll necessarily see too much of a negative impact in terms of the French economy.
Joshua Mahoney, market analyst with IG. Thanks so much for your thoughts.
Thank you.
I'm Rhonda Schaffler for The Street.